I'm putting the session on record. Okay, Fatima.
Sure, sir.
Yeah. So I'll just read out some points here, which will give you a very good idea regarding the concept.
All right, sir.
So yeah, so what happens? Ledger accounts summarize all individual transactions listed in the books of prime entry. So here with the books of prime entry, I mean journal. So
Yes, sir.
journal is the book whereby we record all the entries. Those entries we take and we post them in ledger. That okay. So how we'll do that we are going to see right now.
Yes.
See, a business is continually making transactions. Of course, every day you are involved, your business would be engrossed in either buying, selling. There will be various transactions happening in the business. Okay. So do you think they
Yes.
are going to prepare statement of profit or loss and balance sheet or statement of financial position on every day basis? No, they are going to
No.
prepare the statement of profit or loss or statement of financial position at the end of the year. Am I right?
Yes, sir.
Every company has to prepare the statement of profit or loss or statement of financial position at the end of the year. But they can record all the transactions in the books of prime entry called journal, and every month or like on daily basis they can maintain their ledger also. Okay. Now,
Right, sir.
however, a business should keep record of transactions that it makes. That is definitely a norm. The assets it acquires and liabilities it incurs. Of course, whatever happens in the business, shall we keep a record of that or not? Of course, we shall keep a record.
We
Isn't
should.
it so?
Yes.
Yeah,
Yes,
every
sir.
business does that and it's a norm. These should be recorded in chronological order and dated so that transactions can be related to a period of time. Yeah, of course. Now, if I want to see the transaction which happened on January 1st, I'm in the I'm on 50. I'm on 15th day of January, and I want to check the transaction which happened on 1st January. So if I have all the records, can I do that?
Yes, sir.
I can
We
easily
can.
check, correct? So
Yes.
when time comes to prepare a statement of profit or loss and statement of financial position,
Mm-hmm.
see, we are going to prepare everything at the end of the year. And for that, we required relevant information. Those relevant information we would get from these books, which we are maintaining. Am I right?
Yes.
Yeah. So what happens? How
Yes.
this information passes and how you come to a conclusion at the end of the year. First,
Through the
every day.
ledgers?
Sorry. No, I'll explain. I'll explain. So what happens? The first thing is transactions happen on everyday basis. You agree with this or not, Fatima?
Right.
And
I agree, sir.
yeah, so that is invoices. Invoice is nothing but it's a document which is given by the seller to the customer, and it
Mm-hmm.
indicates that the customer has to make the payment to the seller. Am I right?
Right. Yes, sir.
So these kind of invoices every day the seller gives to the customers. Why? Because seller is selling goods to customers and seller buys the goods from suppliers. So suppliers give invoices to seller. Am I right? Suppose this is your business. You buy the goods from suppliers, you sell it to customers.
Right. Yes, sir.
So these guys give you invoices and you give invoices to customer for the goods what they bought from you. So these invoices show the transactions are happening. It's a proof of transactions happening.
Yes,
Correct?
yes. Yes, sir.
Then what you do, you have a mechanism, you have a way of writing these transactions in certain books. Those books are called books of prime entry or journals. Okay, so
Okay.
yesterday I have shown you what is the way to write. Am I right?
Yes, sir. Yes, you are.
And then you prepare ledgers, and after preparing ledgers you prepare trial balance, and then trial balance is something which you take as a base, and you prepare the statement of profit or loss and statement of financial position. So in
Right.
this order the things happen, correct? Yes.
So could you please tell me once again so that I can note it down, the procedure?
Yeah, see, first transactions, you can make this
Transaction.
can you make this flow chart?
Yes, sir.
Yeah, you understood now this flow chart.
I did. I did. Yes, sir.
Yeah.
So transactions first,
Then
and then
transactions
journals.
are journalized, then they are summarized by way of preparation of ledgers and trial balance, and then they are taken as a base and the statements are prepared at the end of the year.
All right. Okay, sir.
Yeah. Now, nominal ledger. So what does this nominal ledger mean? Nominal ledger is an accounting record which summarizes the financial affairs of a business. Okay. So whatever
Yes.
happens, we put everything in a ledger account, and we generally summarize. For example, I have a cash account. I'm maintaining a cash account, so I make a ledger related to this cash account. So I put all the transactions which are happening in cash, okay, in this
Yeah.
account called cash account. Am I right?
Right. Yes, sir.
So this cash account, how it would behave is, I would see all the receipts what I'm getting, and I'll see all the payments which are going out. Suppose I
Right.
have receipts of 10,000, I have a receipt of 20,000. So why I'm writing receipts in the debit? Because debit shows increase in asset. Am I right?
Debit shows increase in asset. Yes, sir.
Yeah, debit means increase in asset.
Yes.
Debit also means increase in expense.
Yes, sir.
Credit means increase in liability. Credit also means increase in income, correct?
Yes, sir.
And apart from this, if there is any, if asset is increasing, it is in debit. If asset is decreasing, it is in credit. Am I right?
Credit. Yes, sir.
Yeah, credit, asset decrease. And if liability is decreasing, it is in debit. Am I right?
If the liability is increasing, it's in debit. Yes.
Liability increasing in credit, liability decreasing in debit.
Debit. Okay, sir.
Yeah, so debit, liability decrease. Okay, so this we will see right now. So now when I see here, whenever I see I am getting cash for transactions, so I will write them in the debit. Why? Because debit is what? Increase in asset.
Increase
Am I
in
right?
the asset. Yes, sir.
Yeah, and whenever payments are happening, so I'll just put 30,000 here, and I'll put some like 15,000 here, and then some payment I made for 10,000. So when I see this account, I'm putting all the transactions here. Whenever my cash is increasing, I'm writing in debit. Whenever my cash is decreasing, I'm writing in credit. Am I right?
Credit. Yes, sir.
Now if I balance this account, I know I have these all receipts: 30 plus 20, 50, 50 plus 10, 60, 60 plus 15 is 75. 75 minus 10 is 65. I'm left over with 65,000. Correct?
Right. Yes, sir.
So that is what ledger tells me. And this 65,000 balance which I got becomes a base for me to put in my balance sheet at the end of the year. Correct?
Right. Yes, sir.
So now in front of you, there are certain examples of accounts in nominal ledger. So these are all the accounts for which ledger can be prepared. Okay.
Yeah.
So when I speak about plant and machinery is an asset or liability?
Plant and machinery is a liability.
But why it's a liability? If you can tell me, ratio analysis
Because
videos you have seen. So in ratio analysis videos, I've explained about the definition of an asset and liability.
Yes, sir.
So this is your factory or business. You bought a machinery. So you are saying that it's a liability for you. But how it's a liability for you? Your machinery is how a liability for you?
Because its value keeps depreciating per year.
No, see, value would depreciate. When you use something, it would definitely depreciate. That's a natural thing. And depreciation happens to be an expense.
Yes.
See how it's a liability for you. See, liability means what? Liability is something, some obligation for your business.
Right. Yes, sir.
Is machinery an obligation?
If the business runs on machinery, then yes.
No. You're getting everything in like out of the box. The point here is, the point here is, Fatima, asset is something, okay? Asset is some resource, okay, which is owned by the business. So this is your factory. So you bought this machinery, okay? When you bought this machinery, all the risk and rewards were transferred to you. Am I right?
Yes, sir.
Now this machinery is owned by you. Is it right or wrong?
Yes, it is. It is.
And you are using it on daily basis as per your wish and will. Is it controlled by you?
It is. Yes, sir.
And with this machinery, you will be doing production on daily basis. The finished goods, whatever you are getting, that means production is what you put raw materials into this. You put raw material and you convert the raw material into finished goods. And these are the inventory or stock for your business, which you'll be selling to public. Am I right?
Public. Right. Yes, sir.
When you sell goods to public, you generate what?
The revenue.
Revenue. So this is what you're doing in the future. So is it giving you future economic benefits, this machinery?
Yes, it is.
So when something gives you something which you own, something you control, and from that particular resource which you are owning and controlling, you are like deriving economic benefits in the future. Is it an asset or liability for you?
It is an asset.
Of course. Suppose you have a land, ancestral land bought for 10,000 rupees 30 years back. Today, today the value of this land is 10 lakhs. So you are getting economic benefit of 9,90,000. So you will say this land as an asset or obligation or liability?
It is an asset.
Of course, it's an asset. Okay.
Yes,
so you should keep your basics very intact now. Okay.
Right. So
now everywhere when I speak about asset, you should only tell me whether it's giving you economic benefit or not. When it gives economic benefit, and one more thing, apart from economic benefits, the cost of this particular machinery should be reliably measured. Now, what do you mean by cost should be reliably measured? It should have a cost. Okay.
Right.
Now in my company, there are some people working, Alex, Tony, and Suzanne. So these guys are working in my company. Can I write them in my balance sheet as an asset?
No, you cannot.
See, human beings are very important. Human resources are very important assets for a business. Everyone agrees this.
Yes, sir.
But they do not have a value. Human beings are invaluable. Only their services are valued. So that's the reason why we pay them salary. Am I right?
Yes, yes. Yes, sir.
So now tell me, what is this plant motor vehicle? Is it an asset or liability?
Motor vehicle is an asset because
this you will be using for delivering goods to people, and that will generate revenue for you, correct?
Revenue. Yes. Again, yes, sir.
Plant and machinery again is an asset, and accumulated depreciation is what they are asking. What is this accumulated depreciation?
Accumulated depreciation.
See, what happens is when your asset, plant and machinery is your asset, and its value will decrease every year, correct?
Right.
When we accumulate the values which is decreasing every year, we are giving a reverse treatment to the asset what we have. Am I right?
Right, sir.
So since this we are giving a reverse, see when asset value, see please listen now very carefully. When asset value increases, you write in debit. Am I right?
Yes, sir.
So when asset value increases, you write in debit. When asset value decreases, you write in
credit.
So your accumulated depreciation is nothing but it is an account which is going to depreciate your asset value. I can also say this as a contra asset account. What is that?
Contra asset account.
Yeah. So something which is going to reduce the value of an asset is going to be written in the credit side or not?
Yes, credit side.
Decrease in value of asset is credit, correct?
Right, yes, sir.
So decrease in value of asset is in credit, that is in turn equivalent to a liability. Am I right?
Yes, sir. It is.
Yeah. So accumulated depreciation of motor vehicle is also a liability. Capital is always a liability. But why capital is a liability? Because you are giving it to the business.
Why is capital a liability, sir?
Yeah. You are giving your contribution to the business. Will you not recover it from the business? Or business is not supposed to give you back?
It is supposed to give me back.
Yes, it is supposed to give you back. So it is always a liability for the business. Okay. So see what happens. This is your business, Fatima. Okay. You are the owner of this business. You can contribute $100,000 in this business. Either you can contribute this full amount. Okay. So this $100,000 either you can take a loan from bank or you may have this. I won't deny that you don't have this. You may have this, correct?
Yes, sir.
If you have taken loan from bank, you need to recover from the business and pay to the bank.
Right. Yes. Yes, sir.
And if you even have contributed, you also should get it back from business in your account.
Business. Yes. Yes,
So
of course.
in both
Yes,
the cases, it's acting like a liability.
yes, sir.
Of course, it's a liability. Am I right?
Yes, sir.
Yeah.
But okay, just a little doubt, sir. So
You ask me. You don't deny. You don't be like skeptical in asking. Please ask me.
okay, like the capital is supposed to be a liability.
See, there is nothing to make a rule of such kind. See,
Mm-hmm.
for every question, there should be a justification. So the
Right.
justification I'm giving to you is this is your business.
Right.
Okay.
Yes, sir.
So this business requires money. From where the money can be like provided to the business? The money can be
Either
provided either by Fatima
or
or
by the bank.
or or by bank, and that even through Fatima. So
Right.
Fatima will
Yes.
borrow that from the bank and she will put it in the business, correct?
Right.
So in either ways, if Fatima puts 1 lakh into the business, Fatima requires that 1 lakh again or not.
Yes, sir.
So she will recover it from the business. So it's a liability for business because business has an obligation to give that 1 lakh back to Fatima.
Okay. Right. Right. Okay, sir.
And in second case, even she has the business has to like Fatima has to collect that money from the business and give it to the bank.
Yes, sir.
So in both the cases, it's an obligation to the business. You should think from the business perspective.
Right. Right. Yes,
So
sir.
it's a
I get
liability.
it.
Okay. Yeah. Now inventory, every every time this inventory you're going to sell in the future and you're going to get revenues from that. It's an economic benefit. It's an
Yes.
asset. It's an asset. Trade
Right.
receivable. You have sold goods on credit basis to your customers from whom you are supposed to receive the money back. And that money is not going to be only the cost which you're going to collect from them. Whatever you're going to collect from them is also having your profit margin in that. Am I right?
Yes, sir. Of course. Yes.
So that's the asset for you. And
It's an
whenever there's a
asset.
payable,
Yes, sir.
whenever I speak about payable is an obligation. You are supposed to pay. Always a liability. Correct?
It's a liability. Yes, sir.
Of course, any obligation, anything, if it's a payable, it's a liability. Wages and salary,
Yes,
what
sir.
do you think? You are supposed to pay the, see, payable and paid. These two are different things. Paid is nothing but you're paying right now. Payable is you are going to pay in the future.
Future. Yes, sir.
So salaries and wages, you are paying it immediately to your employees expense. Rent and local taxes you're paying expense.
Again, expense. Yes, sir.
Advertising expenses, expense. Bank charges, expense. Motor expenses, expense. Telephone expenses, expense. Sales, when you sell goods to people, it's a revenue for your business. It's an income. Okay.
Right.
And
Income. Yes.
yeah,
Yes.
and whenever you have cash, it's an asset. Whenever there is a overdraft is nothing but you have been given a facility by the bank. You have a current account in the bank. You're a current account holder.
Okay.
Generally, business accounts are all current accounts. Okay. So what is the concept of this
Current
current
accounts.
account?
Yes, sir.
Every day money comes into the account and you can withdraw the money from the account. Okay. It is an account which does not pay any interest to you. It's just a
Mm-hmm.
indication that your business has an account in that bank. So whatever the business transaction happen
Right.
should happen through that account. Correct? See, your client is not going to pay you. Your client is going to pay to your business.
Yeah.
Via
True,
business,
sir.
via business, you are going to get. Am I right?
Yes,
So,
sir. Yes, sir. Of course.
so so what seeing like the level of transactions what you're having on daily basis, bank knows that
Mm-hmm.
sometimes you may be in a requirement of money. See, we have banks give credit card to many people. Am I right?
It does. Yes, sir.
So credit card is what, it's kind of a loan only. But only benefit is you can pay the amount after 45 days. If you don't pay after 45 days, they'll charge interest on you. But
Interest. Yes, sir.
what happens in a loan, the day when you take, and if you use it or don't use it, from that day itself the interest starts. Am I right?
Thoughts. Yes.
In case
Sir.
of loan, I'm saying in case of a loan,
Yes.
if you
Yes, sir.
take, yeah, but now you'll be asking a question, then what is the benefit a bank has if we are paying them after 45 days? They will, they will like charge, they will take service charges from you. For this facility, they'll charge you for giving services. Okay.
Yes, sir.
In the same way, this overdraft is also very similar to this credit card. How it is very similar to credit card? In overdraft, you get some facility that even though you have money in your account or not, you can withdraw some amount from this bank. Suppose the
Okay.
bank has given me a overdraft facility of $100,000. That means I have money or I don't have money. It doesn't matter. I can always withdraw $100,000 from the bank. That is the overdraft facility
Okay,
they have
sir.
given to me. And they give me chance of 30 days to repay this back. If I don't repay, they'll charge interest on me. Okay.
Right. Yes, sir.
That is overdraft facility. Since it is creating an obligation, it is also surely a liability.
Liability.
So once I would like you to read all this. If you've got any doubts, you can immediately ask me. I'll clarify that. Okay. Then we'll go.
Yes, sir. I'll just. So, the
Sorry. Hello.
last one, total cash out bank overdraft.
Yeah. Okay.
Yeah. It says current asset or liability, right?
Yeah. Yeah. Current
It
asset. See, cash is a current,
okay. So
cash is a asset. It shows debit balance. That means increase in asset, and its opposite or reverse is bank overdraft, which is a liability, which is an increase in the, which is a liability. Okay. Why? Because
okay.
overdraft creates an obligation, and cash is what you own. It's your money. Hello.
It's my money, right? Yes, sir.
Okay.
Yes, sir.
Any
Am I
doubts?
audible?
Yes, yes, you're audible, Fatima. Any doubts?
No, that's all, sir.
Okay, now yesterday, since we had a very good discussion regarding the dual effect, we will discuss that again in details. See, a sole trader is nothing but a single owner of a business. He is paying 6,000 into business bank account. So suppose there is a business called XYZ Limited. It has a account in a bank by the name XYZ Limited account. Okay. So what
Okay, sir.
the sole trader like Alex is doing is he is depositing money into this account. Okay. So what happens?
Okay.
This account will get money. Am I right?
Yes, sir.
Okay. And this is a bank account. Correct or wrong? Hello. 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 Fatima, can you hear me? Hello. Hello. Hello.
Ma-
Hello.
yes, I can hear you. Can you hear me, sir?
Yeah, right now only.
Hello?
Yeah, yeah, I can hear right now. Shall I proceed?
Can you hear me?
I can hear. Yes, yes. Shall I proceed?
Yes, please.
So Alex had
Yes,
50,000 rupees
sir.
with him. So Alex had how much rupees with him? Hello.
Dollars?
$50,000. Alex has $50,000. Okay. So what Alex is doing is he is depositing this $50,000 in the bank account. So which account is increasing? Bank account. Am I right? The balance in the
Bank
bank account
account.
is
Yes, sir.
increasing. Yes. So that
Yes.
is nothing but debit. Yeah. So bank
Yeah, it is
account
a
is,
debit.
yeah, because it is a asset for us. Cash is an asset for us. So debit, cash increase.
Yes, sir.
And like this money what is putting is a capital, correct? So capital also
Yes, sir.
comes in the credit. Yeah, capital. Now any increase in capital is always credit, and any increase in cash in the future is always debit.
Is
Okay,
always
suppose
the
if
debit.
Alex
Yes.
puts more money, if Alex puts more money, 20,000, that will increase cash, debit. That will increase capital, credit. This is clear.
Right. Yes, sir.
Now sole trader purchases on credit some goods for sale for 400. So Alex has purchased some goods from some supplier, okay,
Mm-hmm.
and he has purchased those goods from supplier on credit. So now when he has purchased the goods, that purchase is an expense or not?
It is an expense.
So debit, increase in expense, purchase,
Yes.
increase in expense, correct? Why
Yes,
it
sir.
is why it is increase in expense? Already he has some goods purchased. Maybe
Yes, sir.
already he has some purchased goods and is adding up more like purchases to his like goods what he already has. Okay.
Yes, sir.
So and then what is happening? Is he making the payment? No, he is not making the payment. He is buying this on
It's a
credit basis.
payable. Yes,
So
sir.
that is increasing my payables. So increase
Yes.
in a liability is credit. Okay. So credit.
Credit.
So payables. Why? Because it is increase in payables. Increase in payables is a liability.
Yes, sir.
Increase in liability. Okay. Now, so you can make a note of this, Fatima, once. I'll
Yes,
just
sir.
in
I'm
the
doing
next.
it.
Yeah, yeah. So for everything you can put some situation or scenario. You can assume like this, Fatima, that
Yes, sir.
you already have a purchase of $1,000. You are adding $400 purchase to these existing purchases. So your purchase is increasing or not?
It is.
It is increasing. So debit.
Yes.
So whenever the expense increase, we put in debit. Am I right?
Yes, sir. We do.
So debit purchase. Why? Because increase in expense. And you think your payables are already of $3,000, and now you are again your payables have increased by $400. So
$400.
credit liability increase. That's it.
Yes,
Okay.
sir.
Yeah, yeah. Please make a note of this. Then I'll explain the next two. Today
Yes, sir.
you are
I've made a note of it.
yeah. Today you are more comfortable with the subject. Maybe you have again and
Right.
again listened to the video. Correct.
Yes, yes, sir.
Now sole trader sells some of those goods for cash for 150. So what happened is sole trader has some
Mm-hmm.
goods. Okay. So sole trader sold
Right.
it to people. So already he has $1,000 cash. To that he is adding 150. So it is
Mm.
increase in cash or not?
It is increase in cash.
So increase in cash is increase in asset or not?
Yes, sir.
So
Falls under debit.
increase in asset is
Sorry.
very good, debit. Yes. Now
Yes.
you're answering C. Good.
Yes, sir.
And then this cash you are getting, why? Because you are selling the goods and that is increasing your revenue. So
Yes.
increase in income, that is income here is revenue, is always credit.
Revenue. Yes, sir.
Credit. Okay. Increase in income or revenue is credit. Yeah. Right.
Yes, sir.
Take a note of this. I'll put the last one then.
All right, sir. Done, sir.
Yeah. So sole trader has some ₹1,000 cash with him or
Mm-hmm.
$1,000 and he's
Yes, sir.
paying some rent of $100.
Okay.
So like paying the rent of, so when this is cash account. Okay. Okay.
Yes,
So
sir.
this cash account he's deducting this cash account with $100. So when cash
$100.
decreases, it is decrease in asset. It goes in credit side. Am I right?
Yes, it goes in
Credit
credit.
decrease in asset.
Yes, sir.
And he is already being paying rent to the landlord. He like $200 rent he has already paid and he is paying $100 extra this month. next month.
Yes, sir.
So monthly rent is $100. So first 2 months he paid and third month he's paying $100. It is increasing the expense or not?
It is. Yes, sir.
So increase in expense is what? Debit?
Debit.
That's it. Please make a note of this. We'll move forward.
Yes, sir. Yes, sir.
Okay, Fatima. Let's move forward and you can see this is a format of a ledger whereby this is called debit side. This is called credit side. We write it in this way, debit, credit. Okay.
Yes, sir.
And always total of debit should always be equal to total of credits. That's a rule.
That's all.
Uh,
Yes, sir.
yeah, and as we have seen right now, whenever there is an increase in asset, it is a debit. Increase in asset is a debit. Decrease. So I'll write it here like this. And decrease in liability is a credit, is a debit. I'll write it like this. And expense or increase in expense is always a debit. Correct?
Yes, sir.
So increase in asset is a debit. Decrease in liability is a debit, increase in expense is a debit. And in the same way, reverse of that, when increase of asset is debit, decrease of asset is liability. Decrease of
Yes.
liability, decrease of asset is credit. Am I right?
Yes. Sir, can you give me a moment so that I can just write these down?
Yeah, no, I'm explaining this, then you write.
Yes. All right, sir.
See, increase in asset is a debit. Am I right? I just
Yes,
put
sir.
indication here. So when increase in asset is a debit, decrease in asset is a credit. Am I right?
Credit. Yes, sir.
So increase in asset is debit, decrease in asset is credit. Okay.
Yes, sir.
Now this is the point. Now let's catch the liability. Okay. This is asset. So
Yes, sir.
if increase in asset is debit, its reverse case will be liability. Increase in
Yes, sir.
liability is credit.
Credit. Yes, sir.
If increase in liability is credit, decrease in liability is debit. Am I right?
Debit. Yes, sir.
Yeah. And increase in expense
Is
is debit
a debit.
and decrease in expense is a credit. Am I right?
Yes, sir.
No, let us put it like it's not like this rule won't go for this. It's only
Okay.
increase in expense and income because other way around cash goes out for this. Okay. So
Okay.
increase in expense is debit and increase in income is
Okay.
credit. Okay.
Credit.
Credit.
Okay, sir.
Or expense is always debit and income is always credit. Like that you can write.
Okay, sir. Increase in income is a credit, right, sir?
Always a credit. Yes, yes.
Okay, sir.
Apart from this, two more things I will give you. Capital is always a credit and drawing is always a debit.
Okay, sir. Can you please repeat that once again?
Yeah, capital is always a credit. Why? Because why it is a credit? It's increase in obligation, na? Your
Yes, sir.
business already has 100,000 of capital. Again, you're putting 50,000 of capital to the business. Again, business has to repay 1 lakh to you and again 50,000. So its
50,000. Yes,
obligation is
yes.
increasing. So capital.
Capital. Yes, sir.
And whenever you withdraw money from business, you get money. Correct. It
Right,
increases
sir.
your cash account. Am I right?
Yes, sir.
So that in the sense what happens, see, when you put money in the business, it's a credit. It increases obligation for the business. When you remove money from business, the obligation decreases, correct?
Right.
That will give a reverse treatment, reverse entry. So if capital is a credit, the reverse of capital, this is what you're putting money in the business, this is what you're withdrawing money from business. When you
Right.
put money into the business, it increases obligation. So
Yes.
it's a credit. Whenever I speak about increase in liability or obligation, it is always a credit. Am I right?
Yes, sir.
And when you are removing money from the business, it is reducing the obligation of the business. So it's a debit, correct?
Right, sir.
Yeah. Here, increase of obligation, it's a credit. Okay, that's the reason why capital is always a credit. Here, decrease of obligation, it is debit. So drawings is debit. Okay.
Yes.
Yeah. If you're done with, please inform me.
Yes, yes, sir. Just a moment.
Yeah, you can take your own time.
Yes. Yes, sir. Done with it.
Yeah. So all in all, you can see here asset. So debit shows increase. Am I right?
Yes,
Increase
sir.
in asset is debit. Decrease in asset is credit. Correct?
Right, sir.
So increase in asset debit, decrease in asset credit, increase in liability credit and decrease in liability debit. Correct?
Yes, sir.
And when I speak about capital, increase in capital credit and decrease in capital debit. Am I right?
Yes, sir.
Increase in income credit, decrease in income debit, and increase in expense debit, decrease in expense credit. Correct?
Right, sir.
If you know increase, suppose asset. Asset increase is what? Debit.
Debit. Yes, sir.
So asset decrease will be credit.
Credit.
Liability increase, credit.
Yes, sir.
Liability decrease, debit. Correct?
Debit. Yes, sir.
Am I right or wrong?
Yes, sir.
Capital increase, credit. Capital decrease, debit. Correct?
Yes, sir.
So accordingly, you should put in ledger account when, because debit shows debit only, credit shows credit only. Okay.
Yes, sir.
Debit shows debit, credit shows credit. Now, if at all I speak about income, income increase, credit. Therefore, income decrease, debit. So debit goes into debit, credit goes into credit. Correct?
Yes, sir.
Expense increase, debit. Therefore, if I know the increase, I really know the decrease also. Expense decrease, credit. So debit goes into debit, credit goes into credit. Correct?
Yes, sir.
Please make a note of this. I think now you are almost comfortable with all the concepts.
Yes, yes, sir.
Am I right, or you are just giving me a assurance,
No, 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 sir.
a confident assurance?
No, 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 sir. I do ask questions.
Please, please. I always
Yes, yes,
welcome my students asking questions.
yes,
That
sir.
would make the concepts clear. And I'm assured that you got it. So once
Yes,
you make
sir.
a note, Fatima will move forward.
I'll just make a note, sir.
Yeah, sure. You can take your time. If your foundation is good, F7 paper would be very simple for you.
Yes, sir. The FM, right, sir?
No, FR.
FR. Okay, that's financial reporting.
Financial reporting, yes. After finishing this chapter, I'm going to finish 2 chapters in F2. I'll start F2 tomorrow.
All right, sir.
Yeah. F2 you would be like liking more because
Yes, sir. I like F2 a little
yeah,
bit
it
more.
doesn't have much of this journals, ledgers, all this.
Yes, yes, sir.
Yeah, so it's more like easy to understand, but
Yes.
equally it's very lengthy and concepts are very much in that.
Yeah, yes, sir. That's one problem. I think F2 I remember a little bit.
Yeah, but some chapters like capital budgeting and variance analysis are somewhat
Yes, yes.
complicated. I'll make simple to you, no problem.
Yes, sir. Just a minute, sir. I'm
Yeah,
noting it
take your
down.
time. I'm just waiting. I'm just waiting.
Yes. Yes, sir. Done.
Yeah. So now you have to give the answers for all this. This is the activity for you. Okay. So
Yes, sir.
sales for cash. So when you sell goods for cash, what it does? It increases your cash and also increases your revenue. Am I right?
Yes, sir.
So debit
Debit
cash and credit revenue. Am I right?
revenue. Yes, sir.
Revenue or sales. Because if your cash is increasing, it is an asset and increase in asset is debit. If your
Debit.
revenue is increasing, increase in revenue is a credit. Am I right?
Yes, sir. Yes, sir.
When you sell goods on credit, what happens?
When we sell goods on credit,
Your customers have taken goods from you, so your
yes,
receivables increase. Am I right?
yes, sir. That
It
comes
is
under debit.
debit, asset is increasing,
Yes, sir.
and revenue is increasing.
Increase.
You purchase goods on credit. That means, what is happening?
My
So
payables increase.
your payables increase and your expense increase. Am I right?
Expense. Yes, sir.
Purchase is in debit and your payables is in credit. Very good.
Yes.
Excellent. I'm getting good answers right now.
Thank you, sir.
Yeah, thanks a lot. So when purchase for cash, what happens? Your expense increase
Increases.
and your cash decreases, which
Decreases.
comes in credit. Am I right?
Credit side. Yes,
Asset
sir.
decreases credit. Yeah. You paid electricity bill, so your expense is like kind of increasing, correct?
Increasing. Yes, sir.
Electricity expenses and your cash is decreasing. So decrease in
Decreasing.
asset is a credit.
Credit.
Increase in expense is a debit. Yeah.
Debit.
Or if you take normally, expense is always a debit. That's it.
Yes, sir.
And cash is decreasing in credit. Yeah. So receive cash from a credit customer. So here what is happening?
My
One
cash
account,
is increasing.
yeah, your cash account will increase. That is debit.
Increase.
Your receivable account will decrease. That is
Decrease. That is a
credit.
debit. Credit.
Credit.
Sorry.
Yeah, because receivable happens to be an asset, but like they paid us, so their
Yes.
account is
So
decreasing. Yeah.
right. Yes, sir.
You paid cash to supplier. So your cash is decreasing and your liability is decreasing. Decrease in liability is a debit. Am I right?
Debit. Yes, sir.
Increase in liability is a credit.
Credit.
So payable account. And you borrowed money from bank. So your bank is like giving you money. So your bank account is decreasing, credit.
Credit.
And you borrowed
The
money. So you got cash.
Yes, sir.
But how come when you borrow money from bank? So we can take it in either way also, Fatima.
Yes, sir. It's
Your
a
liability,
liability.
yeah, it's a liability. Your liability account will increase. So can I write loan account in the credit?
Yes, sir.
And your cash account will increase.
Cash
Correct?
account will increase. Yes, sir.
Debit, yeah. So these are all the entries. Just have a look through this. Any doubts? Like
Mm,
you can ask, I can move forward otherwise.
yes, sir. Let's move forward.
So these are all the journals. These are all the transactions for
Okay, sir.
which we have to make journals and ledgers. Okay.
Okay.
So till here, shall we do and continue this tomorrow?
Yes, sure. Sure.
It's your wish. Shall we continue tomorrow or like today, like you'll be again like revising this?
We can continue tomorrow, sir.
Because I thought of taking a date 8 to 9:30. We started
Right.
8:30. So
Right. Yes.
I can have a meeting right now.
Okay. No problem, sir. I'll just revise everything and I'll try to do the activity also, the
Yeah.
Douglas one.
Yeah. No, like tomorrow, see this chapter completely. I'll teach you everything. So first
Yes, sir.
4 5 chapters, I'll give you much more like information required. Okay.
Right, sir. Okay.
Yeah, but we both will do this activity tomorrow, Douglas activity,
Okay.
and
Okay,
tomorrow
sir.
is the end of this chapter. That's sure. And tomorrow I'm starting the F2 also as well as simultaneously
All
for you.
right, sir.
Okay, I'm just giving a normal call to you, Fatima. 2 minutes.
Sure.
Yeah.
All right, sir.